As of today, we are heading to the upside once again, able to see some curling up into positive territory, which we are going to get into. But this means that we were unable to actually confirm that reversal signal on the daily time frame that the 2-hour divergence was overall suggesting. So maybe trap number 3 is not done, but we are at very critical levels. And I'm going to give you those critical levels today. Something that we have not discussed on this channel yet is what we are getting to for 2025, and it is a very big deal, and we're going to get into that right away. So let's go. So yes, we are going to get you guys some daily expected moves, but I wanted to pop over to the SPX just because it's very clear on my screen, right? It's very clear. There's not a ton of drawings. All I mainly have for the SPX are kind of some channel lines, some good trend lines and things like that. And so we can easily see some very cool things here. And when we add this to it, we say, oh, okay, we could end up maybe tagging this upside move at some point, maybe even tagging this in 2025. That might be very possible. But something that we need to consider is the fact that we still have those reversal signals on the daily time frame, but also what is this thick red line that is on my screen? I wanted to give this out to you guys, and I will read off the other levels for the SPY and the QQQs completely for free. So hopefully you guys are hitting that like button, subscribing if you want some more helpful information throughout your week and on the weekends. 6812.58. What is this level? Weirdly enough, this is the upside annual expected move. I calculated these at the beginning of the year. I started calculating these, and then I saw that we were actually getting towards this with reversal signals. So if the market was pricing in the place where we would get to in 2025, this is that level. And look, we are getting to that level. What do we normally do when we get to these type of levels on a monthly or weekly chart with reversal signals? Well, we normally do see, oh, the FOMOers really take over. So this is really where the danger zone is for 2025. If you're going to get caught, even if it is a corrective move, even if it is a dramatic downward move, even if it is a sideways little pullback for a period of time here, right? This is going to be the level where we do see risk heightened for the entire year of 2025. Now, the reason I didn't put this information out earlier is because yearly expected moves, I haven't used them often enough, so I need more data points. And so watching this right now, I'm giving you this information, but watching this area here right now can really help me with my data going into and how to utilize these yearly expected moves. So if you want to get this for the SPX, I'll read off for the SPY, and then we'll give you guys some daily expected moves. So if you wanted the annual expected move, at least the upside move for the SPY, that would be 678.85. Now, why would this be very interesting to us when we look at this week? Well, look where we're at. We're at the upside move for the week is 677.58. So if I was someone, someone looking at all of 2025, looking at all my success, I would be paying attention to this yearly, this annual expected move of 678.85. And if you want the one for the Qs, I will share it with you once we actually get to that chart. But for now, I think it's important we get into these shorter time frames for the SPY. Looking at the 2-hour chart, what happened? What happened here? Well, the 2-hour was able to curl up on that bad bar at the end of the day. Now, this means what? The two drawings, right? We were saying we need to fall down. If we curl up on the 30-minute, we need to lower high this thing. Because if the 2-hour is able to confirm to the upside, that can extend the floor and we can rise that up to that weekly expected move, which weirdly enough would take you into the annual expected move. Pretty crazy that we were able to get there in 2025, especially with that big hiccup early on in the year. So the drawings now that we're paying attention to is, oh, what about that next little divergence point? Do we make a divergence right here, or do we extend the move? So if we're able to violate divergence right here, then you would say a pullback into another move higher would be very likely, some structure like this. But if this is just part of trap number 3, and we're not going to build up into a couple more traps up here, you would just suggest, hey, watch for if that 2-hour starts to confirm down, and this is kind of a head fake. Now, what can we look at on the shorter time frames? Well, we can look at our daily expected moves for tomorrow, right? We can look at these, we can see what's going on. We can see that overall the divergences, hey, they played out in some kind of pullback, but now they're curled to the upside again. So this isn't crossing down, isn't going negative, then these buyers in here are pretty good. So it looks like we may be heading to the upside again. This market is very resilient, holding above that 5-day moving average. The daily expected moves of 676.38 to the upside, 669.84 to the downside. This means that, hey, what would be very, very nice here actually would be a pullback into these buyers at some point. So maybe we're able to see a little bit more of an extended move, get this 30-minute MACD up a little bit higher, start to pull back. And then on Friday, we potentially can see what? We can see another little squeeze-like move on Friday into the end of the day. And we will be looking out for those 30-minute divergences here. Why? Because if the 2-hour divergence needed to be created, then we won't be paying attention to the 30-minute chart. So as of right now, I'd say, hey, if the 30-minute crosses down, there's a little bit of room here. There's some good buyers, so watch for that buying opportunity if that's able to swing back to the upside. If it's able to cross down and make a new low, that's when you would start to more so talk about reversal. So I'd be paying a close attention to if the 2-hour actually crosses down and if the 2-hour actually stays down and makes a new low for the SPY. The Qs, I'm going to read out that critical level for you if you would like it. They have a little bit more room, I would say, than the SPY. So if you wanted the annual expected move, the yearly expected move, your 68% zone, the top side of that is going to be 620.28 to the upside. So you're looking at about 620 right up here. So this is how high you got to get. That was what was priced in from the options market for 2025, and we are getting there. And so is it probable for us to get there? Well, notice that the 2-hour curled up. So let's talk a little bit differently because this has a good cross up right here for the Qs. Well, if the Qs, let's slow down for a moment here. Let's give you guys the daily expected move first, right? 615.43 to the upside, 607.45 to the downside. If the Qs are going to do something here, if the Qs are going to say, hey, we're just making another point of divergence and we're going to curl to the downside, they need to reject right now or potentially recreate those signals, right? Hit the weekly expected move, drop down into a daily expected move, maybe squeeze to the upside next week, and we can see some kind of divergence here. But it's looking like we might want to get to that annual expected move. So as it stands, is the 30-minute bearish? No, it is curled up in positive territory. If that crosses down, it actually has the same amount of room as this cross down right here. So no new low. We discussed this in yesterday's video. The Qs aren't saying they lost anything, right? No new low. So we have to pay attention if the 30-minute crosses up. We were right to do so. That's fantastic. But now we're going to run into the weekly expected move where it starts to become, hey, I need to make a decision for this week, right? These are decision-making areas. This upward purple line means that you're getting outside of the 68% area. So that's a big deal. So for the 30-minute chart, what we want to pay attention to is, do we see little divergences here towards the end of the week? Do we see that? Or are we seeing what we talked about in the video, which is we need that explosive move to the upside. We need to violate all forms of divergence down here on the RSI, on the MACD. We need to violate all of that. So we need to see a surge to really raise the floor and say, yes, we are going up into OPEX for October. Like, that's what we need to see here. But for now, 2 hours crossed up. So that tells us that the bulls are very much so in control until we see some changes later on. So I'm going to pop over into volatility and just show you guys real quickly what's going on here. Well, there's the 2 hour that's almost crossing the center line now. We have made a new high. We haven't made a new low. So we really need to pay attention to tomorrow's open. So Patreon members, make sure to have your notifications on in case you see an update video in the morning. That'll be very important. But does this 2 hour show any signs? Do we get any hints that the 2 hour is going to curl back up? You don't. You really don't. Now, this one right here, you sort of saw the little flow type move, the ABC into the next move. This one looks like there is nothing really that can bounce it. So we'll see what happens with this in the morning, but volatility is suggesting that it might want to come down for a little bit of time as it stands for now. Has the daily signal failed though? No, it has not. So are things peachy and dandy and everything's fine and there is no risk that we're ever going to see a weekly pullback? No, the risk is the exact same as it was about a week ago. It's just you're seeing things ignore risk, ignore risk, ignore risk, and just go up, up, and up. So that's not a type of market that I like to be a part of. I like to be in a somewhat of a rational market. I like to trade it when it starts to become irrational because you'll see those big moves. But once it gets to the point where it's irrational enough to be a Targaryen from Game of Thrones, I'm not necessarily wanting to play that anymore. So I really want to talk about these things very seriously, but at the same time, this volatility signal has not gone away. We are still upwards of 629. We are not seeing the ignorance of risk. We are not seeing the cockiness of a bull market. We are seeing that volatility is growing while the stock market is growing, and that's not a very good sign. Let's look for something else too that we've been paying attention to. Notice that the dollar is still climbing while the market is climbing. Someone is going into cash while stocks are going up at the same time, which means a lot of these things could be dark pool orders. A lot of these things are just rich people knowing something. They are running into cash. We'll see if it pulls back, if it pulls down. But for now, it looks like people are going into cash, and someone out there is selling their stocks to retail at this moment. Apple trying to go up there and make a new high. Doesn't look like it quite did it just yet, but Apple trying to overall say, hey, we need to pull back, but you're starting to get that squeeze behavior. So maybe we're able to go up into earnings. Overall, the MACD is suggesting, hey, Apple could just get a daily pullback. The RSI, I just wanted to click into this to see if there's an extended over divergence. No, we violated it, so that means that we could see another cycle move, like we come down into 242, and then we actually end up going higher. That would be very, very nice for Apple. The 2-hour chart, do we have any sign that that daily is going to reverse down? You do have some reversal signals in here saying, hey, the momentum's weak. But if that 2 hour is able to confirm here, that's where you can see some squeezing as you break through those all-time high resistances and go into the unknown. That's right, the unknown up at these levels. So we will watch carefully for that. But as of right now, you do have divergence on your RSI. You do have divergence on your MACD. So it's going to be very, very critical to watch out for Apple to get some kind of daily pullback in the next few sessions. If the 2 hour confirms up, though, you do have a chance of a 2 hour squeeze into the unknown. We do see here that Tesla is still holding those great things. I love to see this from Tesla, the 2 hour chart to the upside, showing those divergences, saying, hey, look at the daily. It needs to pull back, kind of like an Apple. Now, this should just be a cycle pullback. I think we could go down and test levels like 400. I think we could come down and test this 50 at 370. I really do. And I think that overall, this is saying, hey, we could come down, and then we just look for the pop higher, because there is nothing here that's really suggesting that this has to be a major, major top for a long period of time at this moment. But you do have good 2 hour divergences. The best part about this is we were talking about the structure for the SPY for the Qs to fall down. We were talking about the right shoulder that could have been. This is the perfect way to look at it. The Qs didn't lose their low, so we always had to watch for the continuation of trend. It never even really came close to losing trend. The SPY slightly did, but that's going to happen all the time to fake people out. So it's important to watch both of those indices. But for Tesla, we saw that it actually cut out this low. That's a big deal. And then we're going to react to the upside to try to do what? Test those sellers. And so far, those sellers have come in. But notice that the buyers with this wick are not giving up yet. So if you look at the 30-minute chart, we're actually curling to the upside, trying to say, hey, we have a higher low, but we're still below the 5. We don't have the best buying structure in here just yet for Tesla. So a good confirmation to watch for Tesla if you're going to see continuation to the upside is the 2 hour to actually cross into positive territory. I still don't know if that's enough for you to really get through this big wave of sellers. For now, though, you would say, hey, we're just dipping our toes into negative territory. So if this doesn't go wrong, well, then we might be actually experiencing a daily pullback down to a level of I am being generous, but overall just saying 400. I don't want to be too dramatic with that kind of pullback, but Tesla can do crazy things, my friends. Another one that's very interesting to me is Amazon. I was looking at the signals for Amazon, and Amazon looks like it wants to get a daily lower high in some way. Like it wants to reach up to these type of levels, reach up to that 229 and fail. But as it stands, you have serious rejection divergences down here. You have really a lot of things that look like, hey, we could just see another drop, and then we get the wick below and we're able to see the new high. So Amazon looking very, very interesting, but what can happen here? Well, one, you still want to pay attention if that 2 hour rotates down. So here's how we like to do it. The bearish thing here is if the 2 hour crosses to the downside, you got to know there's risk of going negative. It's very, very close to that center line. But if the daily is able to cross up, who's to say that this is just, some kind of regular pullback? Who's to say that this isn't a what? Well, a higher low, a higher low, a higher low, and a higher low. You actually could potentially see this thing go positive, test the high, go make a new one, just because of the trend still remaining intact. Now, we will look for a structure like this, like this and like this over here to see if we fail. That would mean the daily would cross up. The daily would reject and turn to the downside on your MACD. So that's what I would be looking out for Amazon. But we're about to go into that earnings season. It can be a rough patch for that. Now, Nvidia. Very, very nice things for Nvidia. If you know Nvidia, I think that Nvidia now is coming down to 140. So originally, I believe Nvidia needed to retest this 114 down in these areas. Then we got this squeeze moment. Once we got this squeeze moment, we were able to hold it for some time. You would overall be looking at this area and here for a pullback. And I'm still paying attention to that area. Now, do I think that this daily divergence across has finished yet? No. Why? The 2-hour chart. The 2-hour chart here is very, very nice to watch. Why? Because we look for hints. And most of the time, you will see a 2-hour divergence or a 2-hour lower high before you see a daily MACD cross down. Did you see that? No. So Nvidia has a good shot to do what? Well, if it curls up this MACD, which it really looks like with the price action, it's just the MACD is lagging behind. So the RSI is doing well here. Looks like we're going to test that high and go make a new one. This is where having weekly expected moves can really help you, especially at a time where the market is at peak irrational behavior. That's really telling you, oh, okay, there's a lot of risk, right? That's why I gave you the annual expected move to show you like, hey, we're about to get to that danger zone. And so if Nvidia shows a 2-hour divergence and you see daily divergence as well, yeah, I would be a little bit more cautious to the upside for the time being. It doesn't mean place huge bets for downside, right? Hopefully you're practicing good management of risk, but at the same time, practice your skills because your skills tell you what? Well, if I see a 2-hour divergence here, does that mean I should take calls? Well, for me, that would be a no. And that's why if you don't know these type of things and you're still losing money out there, the course is down there in the description. It is only $100 for this week. I'm just putting it on for this week because I see people emailing me. I see people having trouble with this market for the time being. And I see that people really want that pullback. So if you're struggling during this time, it might be a good time to try to learn a little bit more. And so that course will be $100. It's going away this week. If you don't have the money right now, well, we will have it back up in November at Black Friday. So Black Friday, we normally start our end of the year sale. So what we're looking for here from Nvidia is the hint that the daily chart can cross down. And that would be, 2-hour pulls back, 2-hour gives a divergence point. That's where we would hope to utilize our weekly expected moves. We can see that on the MACD. We can see that on the RSI. Now, here's the thing that I'm just going to give you if you haven't taken that course yet. If the MACD curls up and you see it violate this, then you would assume, and by violate this, I mean this high right here, you would assume that it's going to make the divergence later. That means if we extend too high, let me get rid of this line. If we extend too high, right, to where we don't have divergence anymore, then you would expect a 2-hour pullback that then goes for another reach higher, and then it will raise the floor for a bit of time. This is what we're discussing could be possible for the SPY and the QQQs into October OPEX, but we need to see tomorrow's price action first. We need to see volatility fully fail. We need to see a lot of things from the market to say that we're going up into OPEX. But yeah, Nvidia, very, very nice here. Now, one that's interesting to me is AMD. So here's the next opportunity for AMD. As long as this thing doesn't just completely flop, you're starting to see 30-minute divergence. So this means AMD's days are probably numbered as far as it goes, but I don't like to bet against stocks like this because it's just screaming. It's going nuts. It got great news. It got great things going on. So it's just, this is hard for me to be like, oh yeah, take a this, take a that. This is more one you look for and you go, oh, okay, that's a massive move to the upside. So where would be the next opportunity? In my opinion, the next opportunity would be a 2-hour pullback, right? We have seen so many times where this has seen a great move. A great move. Let's just go back to a random time right over here. Okay, let's look right here. A 2-hour, just an explosion, What do we see above us? No divergence or anything like that. So where's the next opportunity? Well, it's going to be down here by that center line. So you notice we get down to that center line, we test the 50. You even get 30-minute divergence right here. Very, very nice. And you curl to the upside. Either way you look at this, swing trade or using the full technical analysis course down there, it is very, very good because look what happened next. Boom, an explosion, right? So from confirmation of just the swing trade, you're looking right here at 139.32. And if you're able to hold maybe to a monthly expected move, maybe to a weekly expected move, as this was only a 7-day move, you can see right here is only 7 days. Utilize the weekly expected move. you could have taken this for about 16% gain, and I think that's fantastic. And guess what? Another 2-hour pullback, another move to the upside. So this would be most likely the next opportunity for AMD. See a 2-hour pullback. You would really like to create your gap zone, which actually we might need a daily chart for. There to there, I think. Okay, so if you're looking for a price point to pay attention to, 184.15. Okay, now let's move on to Meta. Meta. I wanted to talk about this one as well. This one is reminding me a lot of Amazon, except the signals here. I mean, you do have 2-hour divergence at these lows. You do have 2-hour divergence on this MACD. So is Meta going to actually propel itself higher? Is it going to do the thing that would be unexpected and squeeze to the upside and make a new high? Because as it stands, I believe Meta, for the most part, we need to really look at this. But Meta for now has made a slightly new low. So this is different from Amazon. Oh, and I'm not even looking in the near term. Boom, right there. So we do see a low, we see a lower low. So what's very likely here? Well, as we got a lower high, the trend is actually trying to go down. So if you get one more lower high, you're probably ending up back in this zone towards 650, maybe even worse than that, because you would have potential, like, I don't know if you'd really call it like a head and shoulders type move here. But overall, you would just say, hey, this is the move that tried to save itself. And if that fails and turns, where's it going? It's going directly into negative territory. So I'm not happy about that. But let's still talk about these. That's 2-hour signals. So this means that the daily chart could actually cross up for Meta, barring some kind of reversal to the downside. So if the 2-hour chart is saying anything, it's saying this daily chart can curl to the upside. Lower high would be very probable there. But if the 2-hour chart is able to fail, meaning fail the daily cross up here with the 2-hour divergence, then the 2-hour turns to the downside. You can make another point of divergence. You can come into this wick, but also you can see that flush. And if you wipe out divergence, that can mean that Meta's in a rough spot for a good period of time. As we flip over to something like Microsoft, you'll notice that the signals aren't very great here for the 2-hour chart. You'll notice for the 30-minute aren't really great for the 30-minute. So you don't want to do too much here. You overall just want to do your assessment of, okay, I don't have great signals, so maybe I need to be patient on this one. Overall, you're saying, hey, we went negative, so if we curl up, we can see that lower high caught itself and heads to the upside. Once again, I bet a lot of people are hoping that you break through a price point of about 532.81. If you're able to break through that, you kind of squeeze up to these levels. You can see a little pullback and get this little left head, right shoulder, actually. I'm not going to take this euphoric moment into consideration, but that is overall what seems to be plausible. What you would look for the bearish thing is if we do not beat that price point, but instead curl to the downside, you are close to negative territory, which means you can actually create structure to keep heading down over time with this left head and right shoulder. So that's overall what's being looked at for Microsoft. Google's very, very nice here. As far as it stands, it is holding really well. We're looking for two kind of moves down here, in my opinion, to get in this little area right here. That would be nice right in between your 20 and your 50. If this would take place and we curl to the upside, that'd be fantastic. Why are we talking about upside still for Google? It doesn't have those reversal signals. That's unfortunate. So we're talking about some that can go down, some that can go up, but we're mainly talking about these things in consideration with the SPY and continuation possibly happening here. As it stands, the 2-hour was able to reject, but you see that the 2-hour was able to cut out this high first, which means left head, right shoulder that could have been is on the table. So if the 2-hour is able to cross up into positive territory, you would expect the daily to cross up and test this high, go make a new one. So as we get through a lot of these stocks, we're starting to see what? There's a few more that look like they have a little bit of gas left in the tank than the opposite, right? So if that is the consideration there, then we would say, maybe we do see that move into OpEx, but we really need to pay attention to tomorrow. So as it stands for something like AMC, this one doesn't look good, right? It's following the GME reversal signals. The daily chart actually was able to cross down. This means you could be in a daily pullback at this point. What you would have liked to see from AMC is actually, one, you did great right here to make this right shoulder that could have been right here. But what you really wanted to see was this level taken out. If this level was taken out, then you come all the way back. That actually looks like a springboard, right? It looks like left head, right shoulder. You didn't get that high to beat it, so I'm a little worried about this one. So as the daily crosses down, you want to say, oof, we might need to make 2-hour divergences. This could be a retest, so look for if the daily is able to swing back to the upside as it is in positive territory, but you have a serious risk of going negative. Now, we mentioned the fact that GME was going to get a daily pullback, right? We were talking very seriously about it. The 2-hour chart here giving the divergences, and we just stated that every single time we've seen 2-hour divergence for GME, the high probability for GME is it's going to reverse. I do believe that there are bad things at work against this stock. I definitely believe that at this point, because I have never seen 2-hour divergences to the upside work every single time. Literally every single time. You do see a 2-hour divergence from GME. They get drastic. Even with the first divergence that gave you a triple one, that was dramatic. And then we go make the triple one. That's more dramatic. So at this point, you are still looking for what? You're looking for deeper prices. You're looking for 30-minute divergences for your 2-hour bounce. You're starting to see those shapings come in. But as it stands, when the daily pullback is over, what shape are you going to see? You're going to see the opposite of this, right? So you're going to see a 2-hour divergence to the downside. And then you're going to potentially be like, oh, a 2-hour divergence. Maybe I'll play that as GME looks like it's gearing up for a big move to the upside. And that might correlate directly to the top in the market, funny enough. So DJT, we were shouting out DJT for the daily signals. That's right, the daily signal is still confirmed. You have seen a 2-hour move to the upside. You have gotten a 2-hour pullback, and this looks like it's geared and ready to go. You've even made a new high here, so price action people would be relatively happy. So this is a very good signal for DJT, and I have officially ran out of time because the girls are back. So I got to say goodbye to you guys. I wanted to say thank you so much for joining today. I hope you were able to get some helpful information. Once again, go back to the beginning of the video if you want those annual expected moves. I just listed out the SPY and the Qs, but we actually gave it for the SPX. If you want that level actually at the end of this video, it's right there, 68, 12, 58. Thank you guys so much for watching. Hope you guys have a great one. I got to get out of here, so peace out.